Hi, welcome to another edition of Numero Studio. In this video, we'll talk about the basics of how stocks work and how we can get started with investing in them. It is interesting to note that as per statistics, only about 1% of Filipinos know about stocks as an investment vehicle, which tells us that as it is, there's still a big growth opportunity for stock market and there's still a lot of Filipinos who need to be educated about stocks as an investment vehicle. But what are stocks and how do we gain by investing in them? Stocks, along with bonds, mutual funds, and their hybrids or derivatives, are a classification of financial instruments called securities. A security is a negotiable instrument where profit is anticipated through third-party management. In other words, by investing in securities, we expect to gain through the efforts of others. A stock is a representation of ownership in a company, and if one owns shares or a stockholder of a company, he participates in its profits and losses. Another way to look at it is, imagine Jollibee as a company as a big pizza divided into smaller slices. Each slice represents a share in the company, and when you buy shares of Jollibee, you own small slices of the company. The way companies make their shares available for ownership to the public is through an IPO, or initial public offering. There are different reasons why companies would go public, which includes raising more money for growth or expansion, growing company value, or increasing credibility. There are stringent requirements for a company to get listed in the Philippine Stock Exchange, and so going public raises the company's value and credibility. A bond, on the other hand, is an instrument of indebtedness of the bond issuer to the holders, which means that if you are a bondholder, the company owes you the amount stated in the bond, called the face amount, and promises to pay it back with a stated interest at a specified term called maturity. Notice the difference between a stock and a bond. A stock represents ownership, while bond represents creditorship. The company owes you the amount without you being necessarily an owner. While companies and corporations can issue bonds, the government is by far the biggest and most reliable bond issuer. Shown is an example of a news article announcing the issuance of bonds to the public to finance the Build program of the government. So, when companies want to raise financial capital from the public, there are two ways by which they do it. They can issue stocks by way of IPOs and share ownership with stockholders, or issue bonds and pay bondholders the borrowed amount along with a fixed interest when the bonds mature. Take note that there is a greater risk in investing in stocks than in bonds, as its growth depends on many different factors. In bonds, a fixed income is almost always assured, while the same cannot be said for stocks. However, there is a bigger earning potential in investing in stocks because of the risks that come along with it. This is called the risk-reward trade-off in investing in securities. The higher the risk, the bigger the reward. Another type of security is mutual funds. Mutual funds are companies that pool together investors' money and invest it into different kinds of assets, which can be a group of stocks, a group of bonds, or of short-term investment instruments called money market, or a combination of these. The hallmarks of mutual funds that set them apart from other securities are its diversified nature and the presence of a professional fund manager. In the Philippines, mutual fund companies are registered and regulated by the Securities and Exchange Commission. There are many different types of mutual funds depending on the portfolio or the selection of its underlying securities. A money market fund would have short-term instruments like time deposits, treasury bills, or commercial papers. A bond fund would be invested in bonds issued by different companies. A balanced fund would have both stocks and bonds in its portfolio. An equity fund would be invested in stocks of different companies. An equity index fund would have stocks that are listed in the Philippine Stock Exchange Index in its portfolio. The stock index will be explained in a while. So, we know now that there are such assets as securities, and stocks, bonds, and mutual funds are examples of such securities. Now let's focus on stocks. How do we earn from investing in stocks? First, by capital appreciation. The big idea here is to buy shares when the price is low and sell them at a higher price. But what causes the price of a stock to change? There are a lot of reasons. One is supply and demand. As more people becomes interested in a stock, they are willing to pay a higher price to buy it, and as the demand decreases, the price also tends to go down. The company's earnings and expectations also influence the stock price, and so do sentiments and attitudes brought about by recent news about the company. These will have significant effect on the price. For example, when word about Dito starting to set up its infrastructure for its upcoming operations as the third telco provider in the country made its price go up significantly with as much as 6 times its price from a few weeks before. Also, when the news about ABS-CBN not being granted the franchise to continue its operations broke, it plunged its stock price to its lowest levels since going public in the 1990s. Holding shares short-term is called trading, and some would like to call long-term holding of shares investing. Selling of shares can happen intraday or within the day you bought them, and you call this day trading, or within a few days or weeks depending on when you are satisfied with your earnings. Or you can hold on to the shares for many years for the purpose of long-term savings, retirement, or for other personal reasons. A word of caution though. While many have made fortunes in trading, it requires technical knowledge of studying the charts and preparation, and is definitely not suitable for risk-averse individuals. Many have lost considerable amount of money by blindly following recommendations without analyzing the charts through technical analysis or examining the company's fundamentals. The other way in earning through stocks is by way of dividends. What is a dividend? A dividend is a portion of company's earnings given to its shareholders. Dividends are a good sign of a company's financial health because it only means that after having fulfilled its obligations and liabilities, it still has extra funds to distribute to its shareholders as dividends. These can be in the form of cash, stock shares, or property. Stocks can be classified based on some characteristics. First, we have the blue chips. These are the big guys. These are stocks of well-established, financially stable companies and provide steady returns. They have at least a billion pesos in capital, high trading volumes, and a proven track record of generating income. We also have dividend stocks which offers regular dividend payments. There are also growth stocks. These are usually startups that have high earning and growth potential compared to other companies. There are defensive stocks that have stable earnings since they offer high demand goods. Cyclical stocks are those companies that have seasonal earnings as they offer non-essential goods, and speculative or penny stocks that have high volatility and are the favorite of traders due to high reward potential. Now let's talk about the Philippine Stock Exchange Index, or the PSEI. The PSEI is the main index of the Philippine Stock Exchange and represents the overall movement of the Philippine stock market. This is a comparable to the S&P 500, Nasdaq, or Dow Jones in the United States. It is composed of the 30 largest and most active listed stocks in the Philippines. PSE.com.ph, the official website of the Philippine Stock Exchange, gives a list of these companies, which includes Ayala Corporation, Globe Telecom, SM Investments Corporation, among others. This is a chart showing the trend that the index had been following over the years. There was a temporary interruption in the upward trend during the 2008 financial crisis, and right now, we are experiencing yet another setback in the economy, as shown in how it dropped significantly, sending it to its lowest levels experienced in the recent years due to the effects of the pandemic. But this chart is also showing that we are on our way to a slow recovery. Now all these begs the question, how do we get access to stocks? Just like how you look for food in a usual market, stocks are traded, bought and sold in a stock market. In the past, only people with large capital had access to stocks. They approached traditional brokers who buy or sell shares for them. With the advent of technology, however, online brokers gave the ordinary investor access to stocks with as low as 1,000 pesos minimum to open an account. PSE.com.ph also gives a full list of all online stockbrokers that are available in the Philippines, and these are some of them. Opening of accounts have also been made easier recently, as these can already be done fully online. You can check the description below for links of where you can open an account. This concludes the presentation of the stock market basics. There are more in-depth discussion of technical analysis for trading and fundamental analysis for investing, but that is for another video. I hope this video gets you started in your stock market journey. It can be a very rewarding experience if you know what you're putting yourself into. Always remember, risk comes from not knowing what you're doing. Congratulations for making it this far. Please comment, like, share, subscribe, and hit the notification button to get notified for my future videos. I'll see you in the next one.